I want to get some instant reaction to this from David Burrows. He's President, Chief Investment Strategist at Barometer Capital Management. And David, I think that coming into this, a lot of people wondered, would the Bank of Canada be worried about if they cut at 2 meetings in a row? Is that going to start to signal to the market that they are getting ready to just cut with each successive meeting? And to a certain extent, they're pushing back on that, but they do seem to be increasingly worried about what happens if they don't cut, it seems like.
Well, you know, we expected them to say that they would watch the data, and they're going to watch the employment data specifically. They're going to watch the growth data. Some of the weaker global earnings reports will have fed into this, so that's not a surprise. Look, when they start to cut, they tend to cut in clusters. This is the way that it works, and it's time. It's clearly time. I think there are risks in the housing market, and it's interesting that the banks are reacting favorably to this. Should help from a pressure perspective there.
I just want to highlight for our audience when it comes to the risks, because as I mentioned, it seems like there's an increasing emphasis on some of the potential downside risks. One of the things that people talk with us about all the time is that we've got a different mortgage market than the U.S. In the U.S., if you're in the housing market and you have a mortgage, oftentimes you're locking in for 30 years, and there's a lot of people who locked in at reasonable rates, and they might not be selling their homes right now, but they're not stressed about mortgage renewals. In this country, a lot of people are stressed around mortgage renewals, and looking at what the officials listed as considerations, weaker than expected household spending as a downside risk. They pointed to the upcoming mortgage renewals as a risk when it comes to consumption growth. I guess if people have sticker shock and they have to pay more for their mortgage, they might have less money to spend on other discretionary items, for example. They also said in the statement they're seeing more signs of slack in the labor market, and job seekers are taking longer to find work. We have an unemployment rate right now north of 6%, at a time when we've got record population. So obviously there's a growing emphasis on how this higher interest rate environment is impacting Canadians right now.
Right, and I do think you're right. Canada is impacted more by this rate hike cycle than some other countries. You know, we were weak from a productivity perspective coming in, and so if we get the employment picture backing off, some slack there, and some slack in the housing market, you know, it does create some downside risks that they really have to take quite seriously.